Hello and welcome back to another day of charting. My name is Justin and today we want to ask ourselves whether or not there has been capitulation in the market and whether or not there has been enough pain. I'm talking about max pain, and I say that because when I look at this chart, it tells me that retail is devastated. This is the ARKK chart from Cathie Wood. We can note here that I've smoothed this out to a yearly chart, and oh my goodness, does this look like a washout. We can note that, again, trying to smooth the data out, I can note that we've already had 2.3 billion shares traded in ARK so far this year. It is only May 10th. That is as much volume as we saw the entire previous year in 2021. And looking back to 2020, which was the flagship year for Cathie Wood, she had about 500 million shares in volume. So 500 million bought and then 5 billion sold. That is a 10-to-1. The fire sale might be over. And I say that because, as we look here, this is very interesting because I was looking for a complete washout or flush on ARK for us to get down to roughly 37, and we hit today at roughly 38.7. That is close enough to say we almost got there. And other chart that I was really focusing on yesterday for that max pain was here on the Russel. So again, have we actually hit enough max pain? We did actually not only test the previous tops from 2018 and 2020, we went a little bit lower and we actually snapped back. So when we look here at IWM on a weekly chart, what's very interesting is just that we got down right to here at the level, roughly 172. We hit a low of 171.2 today. And then we bounced up here to close at roughly 175. And we are just below that 200 weekly moving average. So ARK, pretty much close enough to the level, right? Within $1, IWM already got there. And this is very interesting because I'm noticing that, like I mentioned yesterday and on the weekend, I'm noticing that people are starting to come to grips that this bear market might be real. They're sobering up, and I'm seeing a lot of capitulation warning signs. Again, capitulation is defined by, I'm getting 100% out of the market. I can't afford to lose more. And that is what I am hearing. I'm hearing it almost everywhere. People are just fed up with the market. They want to fold. And because we are right around extreme fear, actually in extreme fear, exact same level as yesterday, if people wanted a reason to sell, we are here. So we've hit key support. We bounced off. We're in extreme fear. This is a classic recipe for at least some relief. We've also deleted about $4 trillion in market cap so far this year. As a reminder, Tesla's worth about 800 billion right now. So what is that? It's only about 5 Teslas. We deleted 5 Teslas so far this year. only in the NASDAQ too, right? That's only the NASDAQ. That's not the broader S&P 500 either. Oh my goodness. When will this end? Final thing to look at here before we look at the charts is going to be the key dates. We have economic data coming out pre-market tomorrow. We've got CPI, and the reason why I want to focus on this is because as we look forward to the data for tomorrow coming out at 8:30 a.m. New York time, this is going to be a make or break. And the fact that we did not rally into the close, today, actually gives me a lot more confidence that we might actually see that bounce tomorrow. If the bounce is going to turn into a reversal, we definitely have a lot of work to do, but what will be in focus for people like me who understand these fundamental numbers is going to be three of them here specifically. The one that's going to be the most important is going to be the one coming out at 8:30. They're all at 8:30 actually. It's going to be core CPI on a month over month. And the previous reading was 0.3. We're expecting 0.4. This just means whether or not prices in April were higher than they were in March. And if it's going to be coming in at 0.4, that would mean that we're actually still increasing versus the previous month. However, if it comes in at 0.3 or 0.2, that would mean that, again, potentially, we're seeing a peak in inflation. We also see that here by looking at the year over year, where the previous reading was 6.5, and we are forecasted at 6.0. Same thing for the secondary number here, again, coming in at, again, CPI, not core CPI, coming in at 8.5 on the previous reading, and right now we are forecasting 8.1. So what this tells me is that if the numbers come in line, this would mean that inflation's actually coming down on a year-over-year perspective. Even if we beat this previous number, as long as we are below 6.5 on the core and 8.5 on CPI, that's actually going to show a reduction. But the most important number for moi is going to be this one here, the month over month. And I'm not sure which way it's going to go, but we're going to be paying very close attention to it. All right, so that is pretty much everything we had to have the market start for today. We can also note that SPY and QQQ are still very close to being synchronized. S&P closing out at 399 and QQQ closing out at 300.76. However, in the signs for a bottom, what we want to see is tech lead. And what we're noticing today is that QQQ is up by 1.2% and S&P is up by 0.2. So QQQ outpaced SPY today by roughly a factor of 5. And that is going to be largely led here by, again, the largest blocks. Apple, Microsoft, Google, Amazon, Tesla, NVDA, Adobe, AVGO. A lot of these stocks are snapping back today. So that's what's causing QQQ to go higher. We also note that TNX is below 3 at 2.99 and oil is throttling $100 right now. So let's move forward to our next section here and let's start wrapping up by looking at some charts. Starting here with the SPY. Like I mentioned, if people were looking for a reason to sell, they probably got one. And I say that because what I was looking for specifically at the open was continuation. And we opened here, again, a small gap down. We pushed up, but we did not actually manage to test yesterday's high. All we managed to make it to was in between the Friday low and the Monday high. So I was looking for a new higher high to get formed today for us to actually start squeezing back up. And yesterday's high was 406.41, and our high today was 406.08. So the fact that we did not quite hit a new high of the day means that we faded back down. We lost the low. We did hammer back up. But that means that if people were looking for a reason to sell, fear was already high, and you're like, oh, great, another red day, right? Mr. Red just cannot leave us alone, right? And I think that if we would have actually rallied in a V recovery today, I would have been a lot more skeptical on the reaction to the CPI number tomorrow because I prefer a fade. It's just like earnings. I'd rather have a dip into the critical date than actually rallying into it because now the bar is pretty low. And if they want to have a positive reaction, anything above 400 is going to be received well. There you go. Last thing I want to point out is that even if the bulls do make progress tomorrow, we have a lot of work to do. Notably, we have to bounce off of, we have to take out last week's low at 405, and we have to make it back above 411 to get back above that monthly low. And this is going to be a very important pink pivot before we get to 432, which gets us out of correction or that negative 10%. And the reason for that is because we're looking for that $1.1 trillion in inflows that has come in so far year to date. That is their break even here at 428. So really looking to see whether or not we start to bounce and where people start to look. People are looking to start to sell because if they're selling fast, it means that we're probably not going to make it to that 428 and they're going to add pressure as we are not even quite there. QQQ, again, technically did print a yearly lower low and that could be a sell signal. That's what I would be using as a stop loss myself. 297 last year. We had a low of 295. We did it twice, right? Back-to-back days, but staged a higher low. So, right, really tough to call. I think that if people wanted a reason to sell, they probably got it, like I said. So QQQ is already starting to get ahead of the S&P 500, putting in a doji here today. If we're going to get a reversal tomorrow, I would expect that QQQ is going to outpace SPY by a substantial amount. And I'll make you guys remember as well that QQQ is still down by more than 20% year to date, and we have to get to roughly 327 to get out of that bear market territory. DXY did close up a little bit more, right? What else is new? But the VIX is down below 33. TNX is down below 3. Again, still a higher high, still a higher low, just like the dollar. But again, showing a little bit of froth getting taken out here. We can also look here at oil. And yesterday I mentioned that I did want to see it below 100 for me to get any kind of conviction. And we do still have a higher low pattern setting up here with a cup and the handle pattern, right? So like looking here, if we look at the daily chart, this could still be a cup and handle, which means that we're not out of the woods yet. But if we are looking for the stock market to move higher, oil being below 100 could be a very good indicator for CPI. No guarantees. Gold is also down by 1% here. So, right, that's positive right on the 200 DMA. A fresh cut lower is going to lead to more downside. BTC held 30K like a champ. Held it. ETH holding on to yesterday's low as well and up by about 5% on the day. And instead of looking through each individual technology company, I want to focus on Apple, Tesla, and then 2 more charts, and then we're going to wrap it up. So what I want to point out here is that in terms of leaders leading, because the QQQ was nice and strong today, what I want to see is that we see stocks back above last week's low. So right now, Apple is only down on the week here by about 1.7%, and it is back above last week's low at 153. Very constructive. That's what I want to see exactly. Tesla is also up by roughly the same amount as to Apple on the day by about 1.6%, but it is not below last week's low at 843. So if Tesla can manage to stamp back up here, it might mean that it's actually still one of our leaders. I do want to see it above as well because we have that relative high and the 50 MA, just like Apple. That would mean that we can actually get out of that bear market territory. We're likely going to see Apple and Tesla lead us higher. And then the last 2 I want to focus on here again, just one more time, is going to be the Russel. And the Russel is very important just because we note here that, again, these small caps have been absolutely crushed so far this year. They're now down by 30%, pretty close to 30%, if not right on it. So negative 30 for the Russell, negative 20 for the NASDAQ, and then negative 15 for the S&P. That is where we would expect a dead cat bounce. A dead cat bounce can turn into a reversal when we get more upside. So if the Russell can actually get back above 181 here and take out last week's low, that should lead to a nice big fat green bar and potentially a squeeze. And then finally looking at ARK, right? Oh my goodness. There's been $5 billion, 5 billion shares sold. Woof. This volume is big and strong. We've definitely capitulated, which means we are due for a bounce. And this is the area that I would expect to see a bounce tomorrow, including the Russell and the NASDAQ if we're going to continue higher. With that said, if you enjoyed the video, I would appreciate if you could smash a thumbs up, subscribe to the channel, and drop me a comment. Otherwise, I'd encourage you to watch the video that'll queue up here in a moment for my deeper thoughts on my weekend deep dive. Otherwise, thank you for watching, and I look forward to seeing you tomorrow.